Well, my clock says 11 o'clock, ladies and gentlemen. So I think now's the time to start. Good morning. My name is David Groves, and I'm the chairman of H&G High Conviction Limited. Welcome to the 2023 annual general meeting. There's a quorum present, and I declare the meeting open for business. In opening the 2023 AGM, I'd like to introduce the board and management team of H&G High Conviction Limited who are in attendance. Nick Atkinson, Executive Director, Joseph Constable, Executive Director, Nishanta Senavarati, the Chief Financial Officer of the Investment Manager, and Arthur Folkshangen is in the audience there, who's on the investment manager. We're also expecting later, almost any moment, we hope, Max, the guy from Matthew Pope representing the auditor, UHY Haynes, and we've got Max Crowley, our company secretary, here in the audience. The agenda for today's meeting will be as follows. Joseph will provide a presentation outlining HCF's strategy and first year as a listed company. And following the presentation, there'll be an opportunity to ask questions about HCF and discuss the company strategy more broadly. After that, we'll proceed to the formal matters to be considered at today's AGM, at which point there'll be a further opportunity for questions pertaining to the financial statements and the AGM resolutions. So I'd like to hand it over to Joseph now.
Hi everyone, thanks very much for being here. I appreciate you all taking time out of your day to be part of this AGM. And so I just wanted to give a brief overview of really what we do, what the first year has been like for us as a listed company, and what our strategy is and how we kind of see ourselves evolving going forward. And also wanted to start off by saying a big thank you to our shareholders. But Max, you might be able to help me with the presentation. Yeah. So if you could, yeah, just on the slide, thanks. So as you can see, we have a long-term track record of outperforming the market, and the fund itself had been going since 2007, and we decided to list in October of last year and become a company and take more shareholders along for the journey. But at this point, I do want to acknowledge and send my gratitude to the people who are part of this organisation, and first and foremost the shareholders who make it all possible and support this venture. It's an absolute privilege to manage shareholder money, and thank you very much for your support. We also have, as part of that, as you can see on this chart, since 2007, we've had unit holders of the former unit trust who have been part of this journey now for almost 15 years. So thank you very much for that support and for their continuance. I also want to say and acknowledge my board. We have David Groves as chair, who's an independent director and an invaluable person to have on the board and brings a wealth of experience. He's been part of Grain Corp on the board, equity trustees, and to have someone of his caliber is a coup and fantastic for us. And Nick Atkinson, who made it all possible and to actually form this listed investment company and has been a fantastic supporter of us. We also have representatives from Hancock & Gore in the room, and H&G is the investment manager of the fund, of the company, and Sandy Beard is our chairman, and we also have Arthur, who is our investment manager and an analyst for the fund. We also have some stockbrokers in the room that I want to thank. It's also an important part of our company, and we have Richard Lodge from Lodge Partners, Julian from Bell Potter, and we also have some representatives from our investee companies, and I'm really glad that you could come along because it's a crucial part of what we do. We have John Shuttleworth and Brendan Glass from Centerpoint Alliance, which is one of our longer term holdings, and Scott Breesley here from Anagenics. And yeah, really appreciate the effort to come and be part of it. Of course, we're nothing without the companies we invest in. So final thing I'll just say quickly is we have the service providers, Matthew Pope, who's our auditor from UHY, Max Crowley from Automic, and Stuart Rowe from Registry Direct. So if we could go to the next slide, please. So we've had, as I say, a first year as a listed investment company, having listed in October of last year, so it's almost exactly a year. And I thought it would be a good opportunity to take some stock of what we've done in that year. And it's actually been a really fruitful year and a busy one for us. Very excitingly, we had 3 companies in our investment portfolio receive takeover bids, which is a great outcome, especially when we went around as part of the IPO process and said, this is what we're excited about right now. There's not much value being realized in the market in terms of share prices, but there are a lot of trade buyers and private equity firms who are willing to come and buy these listed companies because they see them trading at such discount. So that's come to bear, and we've had three bids at good premiums. We've managed to perform about 10.5% postal fees throughout this year during a very challenging time, and the index we compare ourselves to is down over that period of time. So we're happy with that. And we also been able to pay dividends to our shareholders, which is a great thing. And franking credits also passed through in the most recent dividend. We've realized some gains, which is always a good thing. And I think a lot of people often question in this microcap space, how do you ever actually realize your gains? You might have them build on paper, but we actually have now almost $2 million in the last year that we've realized. And we've also invested in this fantastic time where there are a lot of cheap companies and just no one particularly interested in microcaps. We've managed to invest $16 million. So that's been a really, really positive outcome, and yeah, hard work bearing some fruit. Next slide. So I wanted to go into a bit more detail on those three takeover bids because, as I said, that's been a big part of our year. We had PropTech Group, which was a pretty short holding in the end for us. We invested in that in June of 2022. It got a takeover bid in October, and that was a software company that was trading at very low multiples in the real estate sector. And again, private equity had to pay a premium of over 100% to buy that company, but the stock market had just not cared about it at all. So it just shows you how much of a discount some of these stocks are trading at and the opportunities that are out there. Most recently, we had Cirrus Networks, also a fairly recent investment, get a takeover bid, and that was by a competitor who was willing to pay a premium of about 70% in the end for that. And again, they wanted to take control of it. I'll go into it in a bit more detail. And we also had another company called Insurance, which was an insurance underwriting business, which got a takeover bid at a more modest 20% premium, but again, still showing the values that's there. So I'll leave the slide briefly, but I just wanted to show where we fit into the listed investment company landscape. And again, one of the reasons why we were excited to bring this company to the market is that we feel like it's a unique thing, and there's no point being just another investment company that's doing the same thing as everyone else. And we are in this microcap space. That's where we invest. We define that as sub $300 million, the company value. Our sweet spot is actually often around the 50 to 100 mil, and there are just not that many people looking in that space. And it provides fantastic opportunities to buy what we think are cheap companies that we can be part of the journey, we can get involved, join boards where necessary, and help unlock value. And it's a bit harder to do that when you're dealing with billion-dollar companies that anyone can easily invest in, and most institutions are interested in. So that's where we're at. Every year it's going to be different, but in the last year, our strategy has borne some fruit. But again, we see us as a differentiated product and a listed company that people can get exposure to microcaps in. And why HCF, I've touched on some of these points, but we are the only listed investment company that's a true investor in microcaps. It gives you exposure as an investor to an uncrowded part of the market. You only need to spend $1 at the moment to buy one share in HCF. And again, you get this exposure to the market, whereas for a lot of unit trusts, you might have to put in a minimum of $100,000. So again, it's a way for people to get this exposure. You can't have ETFs or exchange traded funds that do this microcap investing because it doesn't work for that strategy. So this is the one-stop shop for that. And we've also proven that the strategy works because we have almost 15 years of data about outperforming the markets. And also, why now? Well, microcaps are at cyclical lows in terms of their valuations in an absolute sense, and also compared to bigger companies. And in the big market sell-off over the last 2 years, a lot of investors and institutions decided to really say, we're not going to invest anymore in microcaps. We're not going to invest in anything sub 100 or 200 mil, only going to go into the blue chips. And that's the safe thing to do. And that has created some fantastic opportunities. And this shows that last point. So what I've done here is just gone back since 2004 and done a screen for all companies on the ASX that have a market cap less than $200 million and actually generate revenue, in this case, more than $5 million per annum. And you can see there's been a real skyrocket in those numbers over the last few years. And That's not just because of all the listings we've had. We've actually had quite a few delistings in the last year or two. But it's just because a lot of companies have gone down from being valued at more than 200 to less than 200. And those companies have just been, again, oversold and some fantastic opportunities to buy. So our universe that we get to invest in is pretty big right now. And it's a buyer's market, and we're very excited to put this capital to work. And we have this window. We don't know how long it's going to stay really depressed, but that's where we're at right now. So again, touch on some of these points, but what we're looking for, well, we want to see that there's some upside for when we invest. So we're looking for depressed share prices as we see them that can provide, when at our point of investment, double-digit returns. And we're also looking for companies that have limited downside. So we're not looking to take on a lot of risk by investing in companies with high balance sheets. But if we can invest in a company that has, say, cash on its balance sheet, limited debt, real assets of some sort, and so not much downside, but high upside, that's where we like to invest in. Those opportunities are few and far between, of course, but that's our strategy. We're also looking for companies run by an aligned board and management, and that's a key thing for us. And most importantly, they have to be catalysts for bridging that gap between what we see as the inherent value and the current share price. So it can't just be a passive shareholder and think, well, one day it's going to go up, but that you have to feel like the board and the management are really focused on bridging that gap between this low value and inherent value. And we can be part of that journey where necessary, whether it's nominating people to boards, going on the boards ourselves, helping with merger and sort of activity. I wanted to do a quick case study because it's easy to just have the theory, but this is a bit of an example of how we invest and what we're looking for when we do. So this is Cirrus Networks, which I mentioned before, one of the companies that got taken over, code is C&W. So we invested in this for the first time in August 2022. And by way of background, it's a company that provides IT services to government and enterprise. So you can imagine they're in high demand, everyone moving into the cloud. But they had some corporate issues. And this is, again, something that we will often look for, is that we saw that the share price was low. It was trading on its earnings multiple of about 5 times. Its market cap was 30% backed by cash. And so we were wondering, why is this so cheap? Well, the reason was there was some corporate strife in the past that had a failed takeover attempt by a competitor called Web Central, who was only willing to pay a low premium, so no shareholders were willing to accept. But they got stuck on the register with over 20% of the company, so no one else wanted to buy. They thought this is a big overhang. So until they got cleared, the company couldn't really, from a stock perspective, move on. So we participated in buying that stock off this group. We did our due diligence. We went to Canberra, we met with the group and saw that this is a good enterprise with a lot of industry tailwinds, but had a bit of this corporate stripe. And there was a new board of management, and one of the directors was buying a lot of stock on market, so we felt encouraged to do it. So we invested, and we weren't investing for a takeover bid, but in the meantime, a competitor called Atura saw that there's a lot of value in this company, so they acquired them at a decent premium. So for us, it was a 73% return over those 13 months. Again, it wasn't a short-term investment, but it just goes to show that there's a lot of people hunting around for these companies that are very cheap. So the next example is a very recent investment called Kinatico, KYP. And this is a company we actually acquired in May 2023. We became a substantial shareholder, owning about 7% of that company. So what KYP does is provide identity validation software to government and enterprise. So it sounds pretty boring, and it is really boring. And we know we're living in a world where there's just more and more regulation and more requirements to prove the identities of people, from both in governments or in healthcare or in mining, make sure they got the right certifications. And so this company enables that, and they provide software for these large organizations to ensure that these people have been checked, etc. So it had been pretty poorly managed over the years, a company that based in Perth that had just been over-promising, under-delivering, and the share price was fairly depressed. Also, there was a big tech sell-off in microcaps earlier this year, so we thought this was a good opportunity. One of the founders, who had, again, probably over-promised, under-delivered, was divorced, and his kind of ex-wife's stock came available on the market, so we decided this is a good time to buy in. And again, buying from someone who essentially was just keen to get out. And we thought we could actually be engaged shareholders help them be on a journey and really be active investors. So as part of that, we nominated someone to the board, someone who we've worked with in other companies called Georg, and we're very excited that he will be able to help contribute to really re-rating that company and turning it from a subscale microcap to a really quite important company that's leading identity software verification. I wanted to touch on the investments we've made throughout the year. I mentioned we invested a substantial amount from both the IPO proceeds, subsequent placement, and also some realization. So the biggest investment by size is Eildon Capital. That's a company that lends to real estate development. It's trading at a big discount to its tangible asset value, which is mainly cash and also some short-term loans. So it's a pretty safe book. It had been fairly poorly managed, but received a bid from another company that we had faith was going to help turn it around. So we're part of that journey as they bridge the gap between their NTA and inherent value. I've already touched on Canatco, which is also a decent sized investment for us. We invested in Clearview Wealth, which is a life insurance company, and this is one that's a slightly bigger company, but it's still microcap, and it's one that is doing a very boring product, life insurance. A lot of people get it, but it had a bit of corporate strife in the past with a major shareholder who everyone always thinks is maybe a seller, maybe not. So we thought we're buying good value that is going to be able to resolve itself. It's the cheapest it's ever been, and with life insurance companies, when interest rates go up, it's very beneficial for their float, but the market just wasn't interested in the value. Another one is Connection Telematics that we've become a substantial shareholder in. That's another one where it's fairly low downside in that 40% of the market cap is backed by cash, and high upside. They provide software to dealerships in the US, with General Motors being their major customer. It's 80% gross profit margins, less than 4 times EV to EBIT, so there's some serious value there, and we're substantial shareholders there. And the final one, we're still building a position in, so I know that is undisclosed. But just to show a bit of flavor of what we're investing in and the different kinds of industries we're looking at. Thanks, Max. So I mentioned before the team available to HCF. So we have the actual in blue, and it's a bit hard to see on the screen, but that's the team that actually is the director and the management of HCF. And we also have Hancock and Gore as a group in general that we have access to. And it's invaluable having that wider team, because these are the lifetimes of experience, people who've been in the business and know all the participants and have the networks. And again, it's just absolutely crucial for deals, for reference checking, and finding board members, etc. So this is, like many industries, is one where it's all about the people. So we're very lucky to have this wider network. Slow presentation today. So I'm just going to round off with why to invest in HCF, trying to bring it all together. So I mentioned that this is a buyer's market. It's not always like that. We've lived through bull markets like in 2020, 2021, where there aren't many deals around, but at the moment, people just aren't interested in microcap. So this is the time to be buying, and we're very excited to be deploying capital. We, as a listed company and as now around $30 billion of gross portfolio, are building that scale to actually have a voice for shareholders in these smaller companies that often don't actually have a larger shareholder presence. We have strong alignment between the actual managers and the portfolio itself. So there's 80% ownership by my direct family, H&G owns 6%, Sandy owns 3%. So we again in this for the long term and trying to make smart investment decisions and not trying to flip things overnight. We intend to continue to pay fully franked dividends to our shareholders where possible. And we believe that this strategy is complementary. So it's not your one place to get equity exposure, but in a world of where probably it's increasingly important to be a stock picker and index returns are volatile, we see ourselves as an important part of the portfolio. So think I'll go into the next slide and leave it there. This is just our returns in recent times and over the years. And really appreciate your time. Again, thank you for being here. Thanks for watching this if you're watching the recording. And I'd love any questions from anyone in the room. But also, if you don't have any questions right now, feel free to call or email me anytime. Always love to chat about the stocks.
Do you have any strategy at all for when this micro cap situation deteriorates?
Yeah, so you're talking about when the market in general deteriorates?
No, when your strategy for the micro caps won't be as effective if other people become more interested in them, etc.
Yeah. So when it's sort of a less uncrowded market and people start coming in. Yeah. So we feel at the moment that this is the right strategy to be in. I think we'll just have to reassess on an ongoing basis if we feel like it's a strategy that's not bearing fruit. We have to reassess that. The one thing we know certainly right now is that from speaking to a lot of institutions, they are just not interested in it. So it's working right now. But yeah, we've got to always be flexible and not just stick to a strategy just because it's worked in the past.
Jennifer, I think it just dovetails into what's your selling discipline, knowing the company well, what's its valuation at a time, reset. If there's other buyers and they're elevating it beyond where it should be, then I think the management team will take the opportunity to take profits and move into a bit of cash or whatever it might be, or reallocate to new names. So it's going to be constantly done.
I suppose the strategy works once you get past your micro cap situation anyway. Same strategy, isn't it?
Yeah, beyond like ASX 300, what we define as a micro cap, or
maybe just to follow on from that, does the mandate in the fund force you to sell a company once it goes above 300 million?
No, it doesn't.
So you can hold if a particular investment's done quite well, when it grows above that, you can still hold.
Yeah, exactly. Yeah. So we're really looking at point of investment. Is it sub 300 mil? But again, you've got to be somewhat flexible. And if there's a fantastic opportunity, it's $301 million, we would still invest in it. But we have to feel like we know something, or we have an edge over other investors, or there's a reason why it's cheap, and that gets harder and harder the bigger they are, because more and more people can and will invest in them. But yeah, we'll definitely hold them. If we feel like we know them well and we've been on a journey with them, then we would be happy to hold them beyond. And there's nothing in the mandate to say you have to sell at 300 million.
Just a question, if you make a mistake and you get the wrong company, how was your policy in exiting that? I mean, microcaps by their very definition are illiquid, aren't they?
Yeah, it's a really important thing and something we think about a lot. So we try and build conviction, as the name suggests, but we don't usually go all in into a company, and it takes a long time to get to know it. And we often will build a position over time. So we might invest in a relatively small way, where we feel like we can sell on market if we need to, or there might be some buyers. So we'll do that. And then if we actually realize, well, our thesis is wrong, or the people promised certain things and didn't deliver on them, because management is so important, we do have the option to sell. And we usually are not in something that's so illiquid at this early stage that we can't sell it. But then there's another thing of, if we are investing in something that has a true asset backing and we truly believe in it, or we think the business is fantastic, but it's being mismanaged, which is a very frequent reason for why the share price might go down or something is going wrong, we can then double down and actually get involved and be more active shareholders. So we do try and roll up our sleeves, and we do try and, if we made a mistake, or if we bought the stock price too high, we will try and actually roll up our sleeves and be there journey and turn it around. So I hope that answers the question. And yeah, and just to go on that, we are long-term shareholders, so things fluctuate, but some of our longest holding we've held for 14 years. So yeah.
Anything else? Okay, let's move to the formal business as set out in the notice of meeting. The notice of annual general meeting was mailed to all registered members on or about the 11th of September, and I'll take it as read. Voting on all resolutions today will be conducted by a poll, and for the purposes of the poll, I appoint Stuart Rowe, a registry direct, company share registry, who have examined and prepared summaries of the proxy forms received, to act as the returning officer to conduct the poll. The persons entitled to vote on this poll are all shareholders, representatives and attorneys of shareholders, and proxy holders who hold green and blue voting cards. If you are attending in more than one of these capacities, you have been issued with as many voting cards as you have separate capacities. If anyone believes they're entitled to vote on this poll in any capacity and does not have a blue and green voting card, please raise your hand now and a member of our share registry team will assist you. At the appropriate time, I will ask that you mark your vote for the resolution on the blue or green voting card. If you are a shareholder and wish to cast all of your votes for a resolution, please place a mark in either the for, against or abstain box next to that resolution. If you wish to split your votes, please write the number or the portion of votes you wish to cast in the corresponding for, abstain or against box. Please note that the sum of the split votes must not exceed your total holding. If you are a proxy holder, a summary of the votes to which you are entitled has been attached to the voting card. If the summary of votes includes discretionary votes, these are yours to cast at your discretion. If you wish to cast the discretionary votes, please place a mark in the corresponding for, against or abstain box. If your summary of votes does not have any discretionary votes, you do not need to mark your voting card and will simply need to hand it in to the returning officer at the end of the resolutions. After all resolutions have been read and voted upon, please place it in the box there on the table. And are there any questions in relation to this poll process? No? All proxies have been inspected and all those validly lodged have been accepted. Proxies have been received representing 5,295,463 shares, or 21% of the issued capital. Undirected proxies or open votes that have nominated the chairman as their proxy will be cast in favour of each resolution in the notice of annual general meeting. The first item of business is to receive the company's annual financial report for the 13 months ended 30 June 23. The financial report and the reports of the directors and the auditor have been distributed to shareholders and copies are available here today. There will be no vote on this item and it is a discussion item only. The company's auditor for the financial year, Matthew Pope, is present. Sorry, I'm very sorry about that. I think between us we'll be able to handle any questions. I'll chase up what's happened there. So are there any questions or comments on the financial report or the report of the directors and the auditors? Nothing? Well, we'll proceed now to the resolutions as set out in the notice of annual general meeting. The first resolution is to consider and if thought fit, pass with or without amendment, resolution 1 to adopt the remuneration report as an ordinary resolution. If you wish to discuss the resolution or ask any questions, please raise your hand. The proxies in relation to this resolution are on the screen. If there are no questions, I'll put the resolution to a vote. Please mark your voting instructions now on your form. Now, the next resolution relates to me, so I'll hand the chair over to Nick.
Thank you, David. Resolution 2 is as follows: to consider and if thought fit pass with or without amendment resolution 2, election of David Groves as director as an ordinary resolution. If you wish to discuss this resolution, please raise your hand. Proxies received in relation to this resolution on the screen. I now put the resolution to vote. Please mark your voting instruction now. I now hand back to the chair, David.
Thanks very much, Nick. Resolution 3 is the re-election of Nick Atkinson as a director. Resolution 3 is as follows: to consider and if thought fit to pass with or without amendment, resolution 3 to re-elect Nick Atkinson as a director as an ordinary resolution. If you wish to discuss this resolution, please raise your hand. proxies in relation to this resolution are on the screen. I will now put the resolution to a vote. Please mark your voting instructions now. Resolution 4 is as follows: to consider and if thought fit to pass with or without amendment, Resolution 4 to re-elect Joseph Constable as a director as an ordinary resolution. If you wish to discuss this resolution, please raise your hand. Proxies received in relation to this resolution are on the screen. I will now put the resolution to a vote. Please mark your voting instructions now. Resolution 5 is to consider and if thought fit to pass with or without amendment, Resolution 5 in respect of ASX Listing Rule 7.1A and the approval of future issue of securities as a special resolution. If you wish to discuss this resolution, please raise your hand. Proxies received in relation to this resolution are on the screen. I now put this resolution to a vote. Please mark your voting instructions now. Resolution 6. Resolution 6 is as follows: to consider and if thought fit to pass with or without amendment, Resolution 6 to ratify the prior issue of placement shares as an ordinary resolution. If you wish to discuss this resolution, please raise your hand. Proxies received in relation to this resolution are on the screen. I will now put this resolution to a vote. Please mark your voting instructions now. Resolution 7. Resolution 7 is as follows: to consider and if thought fit, pass with or without amendment, Resolution 7 to ratify the prior issue of shares as an ordinary resolution. If you wish to discuss this resolution, please raise your hand. Proxies received in relation to this resolution are on the screen. I will now put this resolution to a vote. Please mark your voting instructions now. Resolution 8. Resolution 8 is as follows: to consider and if thought fit to pass with or without amendment, Resolution 8 to appoint the auditor as an ordinary resolution. If you wish to discuss this resolution, please raise your hand. The proxies received in relation to this resolution are on the screen. I now put the resolution to a vote. Please mark your voting instructions now. That concludes the resolutions to be voted on today. Has everybody completed their blue or green voting card? And I think now Staff Registry Direct can organise for the resolutions to all be put in that little glass box out there.
Yeah, maybe.
I'll come up afterwards and do it. Okay. Please, are there any other questions before we close the meeting? No, I think we were very lively today, gentlemen. As that concludes the business of the meeting, I declare the meeting closed. The results of the poll will be announced to the ASX once they are available. I thank all shareholders and everybody else for their attendance, and hopefully you can stay and join us for some informal lunch after the meeting. Thank you again.
Appreciate it.